Jeff Sica is joining us today, and let's get back to the world of money, just away from politics, just briefly, Jeff. Do you think that gold can reach $3,500 an ounce? It's $2,900 now.
I mean, this has been a legitimate gold rush, and I absolutely think it could reach 3,500. It's not going to go, there's not going to be a straight trajectory to 3,500. There's going to be pullbacks. But Stuart, what I see happening now in the gold market is you're seeing a lot of these central banks are purchasing physical gold. And the reason why they're doing that is they're anticipating sanctions in line with the tariffs. So countries like China have been a massive buyer of physical gold. They look at what the U.S. did with Russia in their sanctions, and we sanctioned them for over $300 billion. So that's where the money's coming from. So I think we're going to see more momentum into gold. I mean, the story for gold has always been inflation and the dollar. And inflation is not going away. Inflation being the carbon monoxide of the economy. Trump inherited a massive amount of inflation. It's not going away, and gold is still the ultimate hedge.
You know that Doge wants to audit Fort Knox.
Yes.
You heard about that?
See if the gold is really there. I mean,
there's
a big conspiracy theory that says it's not there.
There is a conspiracy theory until we investigate and audit the thing. Here's another one for you. Do you think that we're going to see rents rise sharply? I believe that is your forecast. Make your case.
I think we are in trouble in the real estate, in the housing sector, because if you look at the CPI, the Consumer Price Index, a third of that is for shelter costs. What that means are rents. And here we have the Fed is in a pickle. The interest rates have come down, but we've seen virtually no impact on inflation. And people like myself that build single-family homes, multifamily apartments, are looking for interest rates to come down to fund these deals. And even if they are able to bring interest rates down, a lot of these projects will take 2 years to get approvals. So what President Trump needs to do is he needs to lighten up the regulatory environment that we exist in. Because if he's able to do that, we can build. And like oil, drill. For housing, build. And the only way that's going to happen is if interest rates come down, but more importantly, regulation.
I mean, in the near future, you're not going to be able to build. I mean, this is a year or 2 years in the making, isn't it?
Well, I try to build every day, and then, we'll go out and we'll try to find a project and know that it'll take 2 years to get it approved. And then we talk to the banks, and the banks are still, the interest rates are still high. So what we're seeing is a low in building permits. So supply is falling off of a cliff. And if supply falls off of a cliff, you're going to see rents stay high, and you're going to see housing prices stay high, and that doesn't help anybody. It helps people like me who own these things because there's less supply, there's more demand, and you could charge higher rents. But what we really want to see to help the economy, and now with aluminum and steel price, the tariffs, I mean, I was on the phone with developers this morning and say, how many tons of steel do we need to buy before these tariffs kicks in? It's all going to affect us, and it is a big obstacle to getting this country to where we need to be.
Fascinating. Jeff Sica, thanks for joining us. Appreciate it.
Thank you, Stuart.